What a busy day this has turned out to be. Hello there. I'm Mitch Goldberg. Thank you so much for joining me today. You're watching my live stream. Let's get up the card. Okay, the thumbnail. That's good. And that'll be a nice thumbnail picture for the video. And we are live. Thank you very much. I'm Mitch Goldberg. I'm your host. This is my live stream. It's called Be the Boss of Your Money. It's about personal finance. We cover a lot of things here. But the idea is for you to become the boss of your money. Literally, I want you to be the boss of your money, to make your money work hard. I want you to have control over your money, not your money to have control over you. People do crazy things over money. So it's important for you to get the control. Okay. We need to do that. I've got a couple of things to talk about. First of all, earnings galore. Google, Starbucks, Microsoft. I mean, the numbers have been absolutely incredible. We had two major winners today, UPS and FedEx. We're going to go over a couple of things, and there's some big news today about COVID and some new drug that's coming out. It's really just today turned out to be a pretty big news day, but it really just exploded right after the close. So we're going to get into all this good stuff. We're going to roll the intro, and then got a good show, and you're going to be well informed. Here we go. Thank you so much for joining me. I'm Mitch Goldberg. You're watching my live stream, Be the Boss of Your Money, all about personal finance. If you have any questions about the subject matter we're talking about, or just personal finance, investing, what have you in general, I would love for you to ask me in the comments. To me, that is the best part of doing this. And if you're watching this in the replay, I'd like to welcome you as well. Certainly ask any questions you may have. Write in the comments as if you were watching this in the live, and anyone who watches this, your words of wisdom, words of encouragement are always appreciated on Be the Boss of Your Money. So where to begin? We usually take it through a quick rundown of the market, give you an idea of what happened today, where I think we're heading, give you some perspective. The idea is you want to make sure that you have a portfolio that you could stick with, that you have a retirement plan, an investment plan, a financial plan. And the more you know, the more confident you could be in your plans, which means you're more likely to stick with them over the long term. I would rather have a so-so plan for the long term than have no plan or jump from plan to plan to plan every time the stock market moved or something else in the world moved, because that's no way to get ahead. Okay? It's important. Remember that. I should put that in block letters. I should put that in the banner, but I don't have it in the banner yet, and I'm not going to change it now. But so I see some people out there are watching this, and I greatly appreciate your taking the time. If you want, give us a thumbs up or some, a heart reaction, maybe, depending on what, or applause, depending on what platform you're watching on. We're streaming right now to YouTube, LinkedIn, and Facebook. And it's always nice when you do that, and I'll be able to see who's out there. Okay, so let's get into it. What we'll do is we'll start with the intro we'll start with the quick rundown. I'm going to make my screen a little bigger before I switch over to my computer screen. Okay, let's head over there now. Okay, I'm up here in the corner. Okay, so we're going to get into Bitcoin in a second, but the Dow is up. The Dow is up a measly 3 points today. Could have been worse. It just markets kind of gravitated or around the flat line all day. They just moved up, down, but basically markets hugged the flat line pretty much all day. That's what I'm saying. It was a really quiet day until all hell broke loose with earnings. We're going to go over some of those. S&P barely off after hitting a record yesterday, so still in record territory. NASDAQ, same thing. It's above 14,000. Off 0.3%, big deal. Russell 2000 was up, 3.26 points. It's nothing. Okay. And the VIX, the VIX barely moved. This is unusual. You see the VIX over here. That's the VIX, the red one over here. Usually that moves around 4 to 6% per day, sometimes a little more, sometimes a little bit less. But today it did nothing. That is unusual. That just gives you an idea of how quiet things are. The 10-year treasury at 1.62%. So we're finally above that, out of the 1.5% range. Some people are expecting we go back to 1.75, where we were about 6 weeks ago, when all we could talk about was inflation. Some people think we're about to get another test, another rebound. So we'll see about that. Energy had a pretty good day. Gold kind of flat, silver kind of flat, just, basic kind of a, palladium's up a little bit. Palladium is up because of, cars, pollution control, that sort of thing. People's cars are like having, parts from people's cars are being stolen just to get the little bit of palladium in them. It's pretty eye-opening. And then let's take a look at crypto. Crypto had a big rebound yesterday, up about 8%. Today, up another 2%. Ethereum, XRP, Litecoin, Bitcoin Cash. So nice day, nice recovery for the crypto world. Let's take a look at some of the standout winners. Whoa. UPS, when you see UPS up 10.5%, up almost, up over $18 a share, and FedEx up almost $12 a share, up 4%. That tells you a lot, okay? Because yesterday we had earnings from companies like Otis Elevator and a smattering of other companies, and Crocs, just different kinds of companies. I know with Crocs and Otis, they're about as different as you get. I see the comments out there, by the way. I'm going to get to you. Okay. But Simon Property Group has been going up. When you take a look at this, we really have a booming economy. And when I say booming, I mean booming. I saw, look, so a lot of companies are having trouble finding labor. And the argument is that, well, because of the last stimulus package, people would rather collect unemployment and the federal unemployment on top of that of, $300 a week, because they're better off doing that than working. Maybe some of them are moonlighting or working off the books at other jobs, whatever. But we have 6% unemployment rate. So, but keep in mind, that means we have 94% employment rate if we have 6% unemployment rate. So you have jobs are coming back. I maybe in the lower end, lower paying jobs, people are taking advantage of unemployment stimulus to not work, but it's not across the board. I have a very good friend of mine who owns a trucking company, and he's giving out $10,000 upfront bonuses for drivers, and these jobs pay 6 figures a year. I doubt people making 6 figures a year want to stay home to collect a little bit of unemployment compared to what they could be making with real money. So you just have to look at it at every angle. Let's move on. Okay. So UPS, FedEx, these were monster winners today. Let's take a look at the FANG stocks. Amazon, Facebook, Microsoft were up. Apple, Google, Netflix off. So more or less, these stocks are 3 up, 3 down. These companies are so big they pretty much dominate the major benchmark, the S&P 500, which is an index that you can invest in, but you could invest in a stock or a security that tracks or mimics an index. So I just want to move through some of the stuff here, okay? Because the aftermarket trading, we'll start by taking a look at Google. Google is up $110 a share, up 5%. Now, we've seen many companies up 5 or 10%. I mean, UPS was up today 10% after reporting blowout numbers yesterday. So 5% isn't the biggest deal in the world. We've seen that many times before, but you are talking about a lot of points, $111 a share. And that is just, that's a new high. The high of, you could see that over here, was 2,324. So we're going to be at 2,400 probably tomorrow morning. I mean, it's no guarantee that these pops in aftermarket trading hold out until the following morning when the market opens, but it looks like if I'm a betting man, I'll say, yeah, that's probably going to hold. Okay. I'll bet. So that's a huge move. And let's take a look at Microsoft just reported numbers. think Microsoft is down a little bit when I last checked. Yeah, down $8, but they had a blowout number. Also, they did have a very good high numbers, and they did hit a new all-time high today of $263. So stock had run into what ran into the earnings report and ran into the print already. So the fact that it's giving some back doesn't change to me how it doesn't change how good this report was. Okay. Starbucks is another one. So let's take a look at Starbucks. Starbucks is off over $2, $2.50, but they had incredible numbers, way better than expected. So let's move on. And while we're on the watch list, let's take a look at the sectors, how each sector did. Okay, I'm clicking the wrong button here. Sector ETFs. Okay, energy led the way. Industrials, financials. That's something that you like to see. It's indicative of a strong economy. At the bottom were utilities, healthcare, communications, building materials. Again, but the worst performing sector down 0.77%, the best performing sector at 1.2%. Pretty narrow range, nothing overly crazy. And let's just take a look at some of the big stock market news that I want to get into, and then we're going to just talk for a couple minutes. I see your comments out there. I see one from Daryl. Hey man, good to see you. We will be with you momentarily. Okay. Let me make my screen a little smaller because it's just not looking as good as I want it. Okay. You can see the headlines. Okay. Ford hasn't come out yet. Alphabet's big earnings beat, revenue grows 34%. For companies big as Alphabet to grow revenue 34% is just mind-boggling. So with companies like Google and Microsoft, these companies, the bigger they get. They just don't seem to be hitting the law of large numbers. That means when companies get to a certain size, their growth rates, they just can't maintain them just because of how big they are. Starbucks raises 2021 forecast as U.S. same-store sales growth returns to pre-pandemic levels. Okay, so let's take a look at some of the big news that I want to show you. Then we'll quit the share screen. Okay, CDC says fully vaccinated people can exercise, hold small gatherings outdoors without masks. I mean, I knew that I could exercise before I was vaccinated. I'm just kind of kidding about them being facetious. I just think the title of the article could have been a little bit better, but nonetheless, go back to the gym, exercise outdoors. You don't need a mask outside. Small gatherings outdoors without masks. That's good to know because I'm going to an outdoor gathering on Friday. And Pfizer's new at-home pill to treat COVID could be available by the end of the year. That's pretty incredible. They're testing it out. I'm pretty optimistic that they'll get that drug out. Basically, it's another antiviral drug. It's a protease inhibitor, which does something. It stops an enzyme from being produced that the virus needs to replicate. And at the beginning signs of your virus, let's say you go and get tested and say, hey, you're COVID positive, you get this drug and you take it and helps you get over the disease much quicker and much better. So that's a big thing. Okay. That is a really big thing. All right. So let's just talk about things here. We see the economy is booming. That's something that we've been talking about here. If you're if you're a viewer of the show for a good long time, that the economy is doing extremely well. And with the stimulus and with the reopening, I mean, so many companies are back to where they were pre-pandemic or even better than they were before the pandemic. Now, I know this doesn't include every small business, and a lot of people are still hurting. A lot of people are still suffering, and hundreds of thousands of small businesses have closed, including restaurants. With fewer businesses and less competition, maybe the existing ones will have a shot to stay in business and do better, survive and become even bigger and better. And lots of new businesses could develop as well. And rents are down. Even in New York City, I was just reading an article in the Times about a restaurant that took another restaurant space, and they got this incredible deal on the rent, which made it affordable for this company to, instead of opening up in Brooklyn where the rents are cheaper, they moved to a nice area in Manhattan for even lower rent. It's really remarkable. So these are some of the things that are going on. Does the economy get too hot? Does inflation come about? We're going to know the answers to a lot of the most pressing questions that investors have now. Inflation, will earnings and revenues, I don't think earnings growth and revenue growth are going to stay this strong just because you're comparing things to a year ago. And I think you have to really compare everything to pre-pandemic levels. I don't think saying the first, second, or third quarter of 2020 are going to be fair comparisons to 2021. You have to really go by 2019 numbers. So that's why a lot of people think once we get through this reopening phase, the economy kind of goes back to a low growth, steady, low inflation, low unemployment spot where it was before the pandemic. That's what the Federal Reserve is betting on. While others are saying we're going to have runaway inflation, the Fed's behind the curve. They're going to have to jack up interest rates like crazy, throw the economy into a recession, an economic recession, not a health-induced or health emergency-induced recession. And then we're going to have no playbook to come out of it because the Fed has already brought trillions of dollars worth of securities, and interest rates are already low, and we've already had all the stimulus that we could possibly do. That is a unpleasant thought if it happens, but I'm not quite there yet. And don't forget, as you see gasoline go up and other products go up, that means sales taxes are going up, more people are working, income taxes are going up. So there are a lot of, and when I say income taxes, I'm not talking about income tax rates, like, oh, the tax rates are going. I'm talking that if people are making more money and more people are working, that means more people are paying taxes and more people are paying more taxes. So sales tax, income tax, user taxes for toll bridges, things like that. These are all going up again. And I think these all feed into the recovery story. Now, rising COVID cases, we'll see, but so many people are vaccinated today. We'll see how the rising COVID cases go and how the variants work out with the COVID vaccines. And if we all have to get another COVID booster a year after we get our second shot, or your first one, maybe. I don't know how it's going to work for Johnson & Johnson. They're not the same kind of vaccine as Pfizer and Moderna. We'll see. There's a lot of unknowns. But if you're waiting for all of the unknowns to clear up and for the dark cloud to dissipate, you're never going to get into the market. You'll always hesitate because there's always something new to worry about. Let's take it to the comments. My man, Daryl. Hi, Mitch. What is meant by wealth management advisors suggesting against too much diversity? Okay, well, I think we're talking about diversification in this question. All right. And thank you for the thumbs up. Okay, so getting back to your question, what do we mean by that? I'm not really familiar with that. Like, I haven't heard of wealth management advisors suggesting against too much diversification. I mean, portfolios, overall, your assets are typically expected and should be highly diversified. Diversification is a risk management strategy. It's something we use to mitigate risk, but it won't protect your portfolio from going down in a generally down market, but it could prevent your worst performing investment from overtaking your whole portfolio. And because of that, your portfolio could go down less than the overall market, which means your portfolio could recover quicker. So having said that, I'm not sure what that means. I own a wealth management firm. Okay. I own a wealth management firm, and I preach diversification until the wall behind me starts to turn blue. So I don't think there's such a thing as too diversified. I think it's got to be on a personal finance basis. Let's put the personal back into personal finance for a second. You could ask 10 people what their definition is of diversification, and you could get 10 different answers. So for a wealth management advisor, a financial advisor, to work with a client, it's up to me to ascertain my client's definition of diversification, because my goal is to assess that particular client's risk tolerance, their time horizon to their goals. People have different time horizons because they have different goals. That makes sense, right? So I don't think there's such a thing as too much diversification. I do think I just think it depends on the individual. Now, you could take a look at somebody's portfolio and say, oh, that's way too diversified. Or you could take a look at the same portfolio, or somebody else could look at that portfolio and say, they're not diversified enough. It really, really depends. Now, as far as diversity goes, which I know wasn't your main question, but I've actually been talking about that quite a bit here. And the other day, yesterday, 2 days ago, a few days on Earth Day, it was last week, my whole live stream was about ESG investing, which is environmental social governance investing. Companies that promote minorities, that promote women, gender equality, companies that are good stewards of the environment, companies that help take care of the environment, things like that. We talked a lot about that, and I do have a short take, a highlight from that live stream. I'll probably be posting that tomorrow or the next day. I've got so many highlights to post over the next couple of days. So thank you very much for asking. Okay, that's it. That's my my big spiel for the day. Spiel. You could tell I'm a New Yorker when I use the word spiel, right? So thank you very much. Have a very good night. Saying to you from camera 2. And I'm gonna cut out here. No more questions in the comments. All right. Thank you. Bye-bye.